DocuSign. Is it, just that pandemic darling kind of fading out? Or is something else going on? Did the market just get a big wake-up call about, maybe a budding AI empire? Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Okay, so today we're doing a deep dive into DocuSign, ticker DOCU. We're using our research, and this data was captured earlier today, September 5th, 2025, around 7:58 a.m. Eastern Time. Let's jump in.
All right, first up, the macro picture. The market's got this sort of split personality this morning. You've got NASDAQ Q futures looking pretty strong, pointing up, S&P's gaining a little bit, but then the Dow, it's kind of sluggish.
Yeah.
Okay, let's unpack this a bit. What does that tell us? Feels like a stock picker's market, right? The big waves aren't lifting everything equally.
Exactly. And, if we layer on the bigger economic view, there's still that storm cloud hanging around. You've got economists, Moody's, UBS, others, they're still talking recession risk.
Yeah.
Pointing to things like the inverted yield curve.
Right, where short-term rates are higher than long-term, often a bad sign. Precisely. And slowing labor demand, too. So, while tech might feel okay this morning, the broader forecast, it's still calling for caution. Could be a bumpy ride, which makes what DocuSign is doing even more, interesting. Companies often look for efficiency in tough times.
Yeah, good point. Okay, so let's talk DocuSign specifically. They just dropped their Q2 earnings, and they delivered. Revenue hit, $801 million, up 9% year over year. Plus, they raised their full year guidance. But here's where it gets really interesting, isn't it? It's how they're doing it.
Absolutely. That's the core story here. It's this strategic pivot they're making. They're moving beyond just, clicking sign here. They're going hard into AI-powered intelligent agreement management. Meaning managing the entire contract lifecycle with AI. Drafting, negotiating, signing, analyzing it after, the whole thing. It basically turns documents from static things into active data. This massively expands their potential market.
And attracts those big enterprise clients, presumably.
That seems to be the idea, yeah.
Okay, but here's the weird part. Despite these numbers, this AI strategy, Wall Street analysts seem kind of lukewarm, like 68% are still slapping a hold rating on it. What's up with that disconnect?
Yeah, it's fascinating. It really shows how Wall Street can be maybe a bit slow to catch up sometimes, especially with companies they think they know. They're probably waiting for more proof points on the AI strategy actually paying off consistently quarter after quarter.
Which could mean an opportunity, if you believe the story.
Could be. Our research fair value analysis definitely suggests it's significantly undervalued right now. Based on free cash flow, we're seeing potential over $160. Even using earnings per share, it's over $81.
And yesterday's close was $76.24, so quite a gap there.
A considerable gap, yeah. It raises that question about market perception versus execution.
Okay, so analyst sentiment is mixed. What about the crowd? What are traders doing? We looked at the options market, slightly bearish lean actually. Put-call ratio is 1.05, so a few more bets on the price going down than up, in the near term at least.
Interesting. Any key levels showing up there?
Yeah, the big lines in the sand seem to be the $74 strike for calls, people betting it goes above that, and the $60 strike for puts. And short sellers, they're around about 4.12% of shares short, but it would take them less than 3 days to cover, so not overwhelming pressure.
Okay, so putting that together.
Yeah.
The crowd is definitely watching, maybe intrigued by the earnings.
It's not quite ready to jump in with both feet. Still some caution there.
Makes sense. Now, let's look at the charts. What's the technical picture telling us? Well, it's a tale of two trends, really. The long-term picture, still technically bearish. That's kind of a hangover from past performance.
Okay, the hangover, but short-term.
Short-term. It's a complete form. Decisively positive now. Multiple signals have turned bullish.
Like what?
Volume. For one, it's flashing green. Clear signs of accumulation, which means, smart money seems to be buying in, strong pressure.
Accumulation, good sign. And momentum.
Momentum looks like a sports car hitting the gas. Gaining speed, gaining strength, really accelerating.
Nice. What about volatility? Is it sleepy or waking up?
Oh, it's waking up. After being kind of quiet during a consolidation phase, it's starting to expand, like a coiling spring.
Suggesting a bigger move might be coming? Direction TBD, but bigger.
That's often what that pattern suggests, yeah. So the short-term technicals are lining up really strongly for a move higher, kind of overwhelming that old long-term bearish signal for now.
All right, let's tie it all together then. What's the final verdict from our research?
Based on everything, the blockbuster earnings, the raised guidance, that really promising AI strategy, our research lands on a bullish outlook. That earnings catalyst feels powerful enough right now to push back against those broader economic worries we talked about.
And the technicals back that up.
They do. Short-term trend, volume, momentum, they're all pointing the same way, supporting a move up.
So our research suggests DocuSign just gave investors a pretty compelling reason to buy in.
It looks that way, yes. Now, looking ahead, say, the next few trading sessions.
Key levels to watch.
Definitely keep an eye on that after-hours high it hit, near $86. Getting convincingly above that would signal real strength and continuation.
And on the downside, where's the support?
The key zone to watch is right around where it closed yesterday, and a major options level, that $74 to $76 area. Need to see it hold there if there's any pullback.
Got it. $86 resistance, $74 to $76 support. That's all for this deep dive. So the big question for you, our listener, is probably, will this AI pivot really make DocuSign a long-term tech leader again? Or will those broader economic headwinds eventually catch up? Something to think about. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next deep dive.